Day. And now the one and only Peter Schiff has hit the fan. He saw this day coming and predicts an even worse one come Monday. Peter, good to have you back here on FBN. Explain what happens.
Well, unfortunately, the bailout is worse than the bankruptcy. And the more money the Fed creates, the less attractive they make U.S. financial assets, which means the more assets the Fed's going to be asked to buy up because nobody's going to want any dollar-denominated debt, whether it's secured by real estate or anything else.
Okay, so if you had your druthers, just let them go.
You got to let them go. If I had made the same bad bets as Bear Stearns, nobody would be bailing me out. Why should the average American have to pay more for gasoline and more for food because these Wall Street guys screwed up? Let them go under.
Okay, we're going to be exploring just that scenario later on in the show, Peter. But to your sort of steering us through, you've been right on the money about a lot of these trends and financial issues. But there's a camp out there that says it can't get any worse. You're saying it not only can, but it will.
It will.
And you seem to be looking at Monday for some problems. Explain.
Well, I just thought that Monday, there's people are going to look at this over the weekend, look at the huge drop in the dollar versus the yen. These are creating big disruptions in Asia. I think there could be a real panic. Look at the technicals in the market.
Well, are you saying like an 87 type?
Yeah, I think there could be. It doesn't mean there's going to, but it's certainly we have all the ingredients for a major market meltdown. But more important than just a nominal decline, the market is melting down behind the scenes. The value of our money is shrinking. So the Dow loses value every day the dollar loses value.
Okay. Now, there are a lot of folks as well in the currency market saying, boy, this dollar thing can't continue. You said throughout, it can't continue, will continue. So percentage kind of sense from you, how much more of the dollar fall, let's say, versus the euro?
Well, I think the dollar is going to go down dramatically. The dollar index right now is worth about, 71. I think it's going to 50 in a best case scenario. So that's a huge decline. That would put the euro, I don't know, maybe 1 against the dollar. The dollar is going to lose a lot of value. But if we stay on the path we're on right now, it's going to lose all of its value. So you're saying,
Peter, then that the more we try to fix the problem, the bigger we make the problem. Do we just have hands off and let it rip?
Remember, we're in this mess because Alan Greenspan and George Bush didn't let the recession run its natural course in 2001, 2002, when we burst the last bubble, the NASDAQ bubble. And so then they gave us the real estate bubble, and this one is so much larger, and the consequences are so much worse. We should have bit the bullet back then. We did it. Now we got a much bigger bullet that we got to bite now. And, we're going to be a lot poorer as a nation for what we did for this massive consumption binge where we borrowed trillions of dollars from the rest of the world and spent it.
What do you like in this environment? What do you like?
Well, I like gold. It's over $1,000 an ounce. It's going to keep rising. I like foreign currencies. I particularly like the Swiss franc and the Singapore dollar. They're going to keep going higher. And I'm continuing to move my clients' money as far away from the dollar as I can. If you're an American citizen and you use U.S. currency, you've got a bullseye on your back and you're in Ben Bernanke's crosshairs. He's shooting at you. You've got to escape the real risk. It's not the taxpayers who are going to be bearing the brunt of this. It's savers. It's people who have U.S. currency anywhere in the world. So I'm getting my money into foreign assets. I'm buying safe dividend-paying stocks around the world and just getting out of Dodge because it's going to get a lot worse than this.
All right. So next week, if the Fed cuts rates, you think that's just going to compound?
Of course, they should be raising rates. And not because I think raising rates are going to make the situation better. Of course, that's going to exacerbate and accelerate the decline, but that's what needs to happen. Rates are much too low. They're debasing the money, and all they're doing is buying time, but we can't afford it because the price is too costly for this economy to bear.
Is there any sort of general stuff you like Santa Claus, for example? Do you like Santa?
No, look, sure, but he's not real, and and neither and neither are these our phony economy or the phony profits. See, the problem is a lot of people think that we had a great economy, and then all of a sudden subprime happened, and the good economy got screwed up. Okay. We had a bubble. Subprime was the pin that pricked it, but it was a bubble economy all along. It was never real.
All right, Peter. The great thing about talking to you is I lose my appetite and I lose weight. So actually, you're helping me. But Peter Schiff, always good seeing you. Even though the news isn't always good, but thank you, my friend.
Thank you for having me.
Peter Schiff. All right, well, what if Peter's right?